Hello, this is Mike Swanson of WallStreetWindow.com. I'm here with a very special guest. I'm speaking with David Skarica, who runs the website AddictedToProfits.net. How you doing today, Dave?
Good. How you doing, Mike?
Oh, I'm doing great. It's been at least 2 or 3 months since we last spoke. So people are wondering, where have you been and what do you think's going on in the markets now?
Well, I was in Canada for the summer. What happened was my father had unfortunately a knee replacement. I got a bad knee myself, so probably one day I'll end up having one. But so I was helping him out, and then I kind of, I did a few updates, but I took kind of a hiatus. I thought this would be a quiet summer anyhow. It really has been in the markets, and so basically, we've seen this the market kind of range bound after the blow off into early in the year, and now we're kind of moving higher. Now we're in this seasonal area where one of the potential topping situations I was looking at was maybe the market going back to the going back to the near the highs and then rolling over in the fall. And that's what happened in 2000 and in 1937. Those are two bear markets where the market peaked in the first few months of the year. Then there was a rally into the late summer, rollover. I just think, though, the internals of the market and the way some things are trading, it's just acting too strong. And with the corporate tax cuts taking hold this year and the amount of money we're seeing flowing into stock buybacks, et cetera, I think that's one reason August was such a strong month in the markets, especially on a low volume month like August. If you got a large amount of stock buybacks, it's going to, jump a stock even more. I think if we do not see a decline in September, October, we're going to probably see a good move into the end of the year because the amount of financial engineering that's going to be going on in the market. So right now, I just added some positions, some call positions in 3D printers. That's one sector I'm actually bullish on. And one of the mistakes I've made the last few years, you always got to admit your mistakes, is that I was bullish in all these beaten up companies over the last 3-4 years. And I didn't hold them long enough because I was so worried about a potential massive bear market occurring in equity markets. I'll give you an example. A stock we recommended, Bombardier and Glue. I don't own these right now, but we both recommended those around $2 a share. I think Bombardier went over 4 and Glue's at over 7. So stocks like that I just sold out too early because I was worried about the market action. So with the 3D printers, I'm kind of adamant that, hey, they're already really beaten up, so they're not going to fall that much in a bear market or as much as the rest of the markets. And now they look like they're forming multi-year bases after after falling hard in 2020 from 2014 to 2016, and they could definitely see good rallies here, in the next 6-12 months if we don't see the markets falling apart. And their businesses all kind of declined for the last few years after that big boom into 2014, 2015. And it looks like they're now stabilizing. So there's a group of about 4 of them I like. I'm going to write a special report on that. And that's one sector I like. What I'm doing, the hottest sector right now is the marijuana and cannabis stocks. What I've been doing in those is that I've been doing venture capital pre-IPO deals because most of the trading deals, although there is one trading deal I'm probably going to recommend because it's cheap, it hasn't moved with the rest of the sector, but most of the trading deals are very, very expensive. We're talking you got companies, the big companies are all trading the billions and billions of dollars in market cap. None of them have $1 billion in sales yet. Canopy Growth will probably be the first one with $1 billion in sales, and that's still not going to happen for another couple of years. So a lot of them that have very little are trading with hundreds of millions of dollars in market cap. So I buy the pre-IPO stuff, and then hopefully from the private valuation to kind of the inflated public valuation until the bubble bursts in that sector, you will get a good gain. I'm getting to the point where I'm a little iffy on buying more of those, but I have one stock. They're doing an offering right now. The properties are in the Caribbean and South America. They're distributing in probably in Canada and Mexico. It's a great company. I was really impressed with the management. I met them when I was up in Toronto. And so they're doing a small placement right now. And hopefully I think that thing could trade within the next few months. So that's kind of what I'm doing right now. I got, I like that 3D printing sector. Pick away at some gold stocks that are beaten up. buying some pre-IPO in cannabis. And then I've got put options on companies which I feel are overvalued to kind of hedge against the potential market decline. But one thing I got to say is I don't think you should be a hero either way. Is that I don't think that you should go diving into cryptocurrencies, because many of them are down 80 or 90%, thinking that in 5 years you're going to make a fortune. And I also don't think you need to try to be like Jesse Livermore in 29 and go heavily short the market, trying to be this, or Paul Tudor Jones in 87 and try to be this hero who, called the market collapse. I think right now you should just have long short positions and you can pick away at, like I said, 3D printers and gold and are probably about the only two cheap sectors I can even see right now,
Well, you talk about selling things too early, and I'll tell people I bought a marijuana stock with the pre-IPO, 5 cents pre-IPO, and I sold it a few weeks ago for 10 cents. I doubled my money. That's a great trade.
Actually, I should correct you. You bought it for 3.8 cents.
Oh, okay, yeah, that's right.
Because they did a stock split. So yeah,
that's right.
And you sold it for 10 American. Remember, that's like 12 or 13 Canadian. So really, you bought about 4 and sold it for about 12, 13.
And it's now almost 20 cents. It's 20 cents Canadian. So from where I bought in, it's gone up, even more. And so I've sold early, and I more than doubled my money. If I didn't sell it, I would have almost doubled again. So that's the potential returns when one of these deals really works out.
Yeah, I think that's the whole thing. And look at back when gold was hot in 05, 06, we bought Paramount Gold and a seed financing of 5 cents. And that thing went to $4 a share because the gold was just hot and those stocks were, people think gold is dead right. They think it's horrible because it's dead right now. But people got to remember that in 05, 06, these mining stocks and gold and uranium, they were hot like, crypto was last year or cannabis stocks are now. So, there's always a time and place for these things. So that's sort of my philosophy that, you do these pre-IPOs and say you do 5 of them. Well, 1 or 2 of them might be duds. 1 or 2 of them might, do what you just said, might double or triple. Still, you should be happy with. And then one or two of them will be absolutely dynamite and could go 10, 20, 50x or something like that, right? So that's kind of my philosophy, behind that,
Well, it'll be interesting to see how the markets evolve. I really think this has been a sleepy summer, and there's going to be some moves coming one way or the other by the end of September.
Yeah, you should notice that I think you're seeing like the warning signs, though. Like one market that I've been warning about for a long time in emerging markets was Turkey, because Turkey had all the makings of a disaster. They have this this kind of leader who looks pretty unstable. And then, they had a huge current account deficit. A lot of these companies were borrowing in U.S. dollars. And actually, just so you know, that was kind of an unofficial government policy. He was trying to, if you look at the skyline in Istanbul now compared to what it was 15 years ago, it's totally different. Istanbul used to be one of those cities that, like say London or Paris didn't have a lot of high rises and that sort of thing. Now it's like totally built up, like a North American or Asian city. So and I think that was all part of, because the country was coming more authoritarian. His way of dealing with that was like, see, there's this big property boom going on. Everything is fine. So now you're seeing the kind of reverse of that, and now the money's fleeing. And a lot of companies that have borrowed in U.S. dollars with the lira tanking are going to have problems funding that debt. And that's how these, if you go look what happened in Asia in 97 or Russia in 98 or Argentina in 2001, Argentina's another emerging market's got some problems right now. That's how these things really kind of unfold. And they usually don't end the way this just ended in Turkey, with, the market goes down and things stabilize and goes up. It usually ends with a kind of capitulation, a panic, IMF bailout, that sort of thing. So I still think we have that to go in Turkey. So that's definitely, as the Fed raises rates, it puts even more pressure on those emerging markets. The whole reason there was a boom in emerging market U.S. dollar debt was because they were yielding much higher yields in U.S. So when short-term rates in U.S. are zero, you get a 2-year bond in a Turkish company at 5%. It's a big deal. But when rates in the U.S. go to, say, a 3% short-term, and you're getting 5% in that same bond, it's not a big deal, and there's no demand for it, and people actually would sell those bonds to get a treasury at 3% because you're getting something much more stable for not that much less yield. So I think those emerging markets, is that showing signs of instability. Now, I don't know if we're going to see a blow up, like happened in the fall of '97, a lot of these things. But definitely that, I think, is one of the number one warning signs. And the second one, and there hasn't really much has not happened on this front, is actually U.S. corporate debt. There's been an absolute explosion in that since the financial crisis. And I think that's kind of like the domestic bubble, where like subprime, it's this time it's going to be in corporate debt in the United States.
But this is probably, let's say, if you go back to subprime, this is probably 2005 or 2006. Like that sort of bubble busting is probably, in the future, not today.
Yeah, I think that's a couple of years. That could be a while away too. Well, I really think, like I said, you've got this tailwind of the fiscal stimulus. The tax cuts. When you're blowing up the deficit, you're basically borrowing instead of reining in the spending. That stuff is short-term stimulative. And then you have, the buybacks, which are going to occur, really, I think, explode in the fourth quarter because companies are going to want to jack their share prices and also jack their earnings per share so these guys can get their options and their bonuses. So I just think that, unless you see some kind of big decline. Now, what's interesting is next year those tax cuts essentially become normalized, right? You don't get the one-time windfall. Like, let me give you an example. If you are, if you're making $1 million as a company, I'm just using millions, it's easy, and you're taxed at 35%, you're paying $350,000 in taxes. Well, if all of a sudden that goes to 20, you got that 150 windfall, right? The first year, and that 150 windfall, well, maybe you just use it for stock buybacks. Well, now next year, that's not really a windfall anymore. You're now that 20% is your normalized rate. And you're not going to maybe you're not going to even have that extra money anymore because essentially you're paying that same rate going forward, full time. So I think that one-time kind of boost from the increased buybacks due to those tax cuts is going to see a significant decline next year.
Oh, for sure. It'll be interesting to see how all this unfolds. Well, I know you got another call, so I'll let you go and we'll catch up again in a couple weeks.
Yeah, we'll talk in a few weeks.